In today's video, we will be looking at 5 important patterns used by many traders and historical examples of these patterns at play in the stock market. So the first pattern we are looking at is known as a cup and handle pattern. I only have a diagram of a bullish cup and handle pattern, but on the next slide we will take a look at multiple other examples of a cup and handle pattern. Let's take a moment to analyze this diagram. As you can see, a cup shape is formed and a handle is attached to it, and you are looking for a breakout above the neckline to confirm a bullish trend. Now let's take a look at some other examples of what cup and handle patterns may look like on an actual chart. As you can see in the top left chart, you see a breakout above the neckline at around the $42 level, and that leads to a breakout. While in the top right example, we see what is known as an inverse cup and handle pattern, and as you can see, it is very similar to the bullish cup and handle pattern, but it is flipped upside down and usually signals a bearish trend. And for the bottom chart, we see a normal cup and handle pattern, but as you can see, it broke past the handle, but failed to go above the neckline, which invalidated this bullish trend and led to the stock going down. Secondly, this pattern is known as a head and shoulders pattern. Generally, a bullish head and shoulders pattern looks like the one on the right, where you have two shoulders that go down and then slightly increase, and in the middle you have a large decrease in price. While a bearish trend usually looks more like the diagram on the left, where you basically flip around the bullish head and shoulders pattern. So let's take a look at a few examples of what this pattern may look like on an actual chart. In the top left, you see an example of a bullish setup, but it ends up staying fairly stagnant and not breaking out past the neckline, which leads to the stock invalidating the bullish trend and going down. On the right chart, you see a bullish chart where it sets up a perfect head and shoulders pattern, and as you can see, the stock breaks out past the neckline, and that leads to a massive breakout. While for the bottom left chart, you see a bearish trend, where the stock sets up the pattern and breaks down below the neckline, which leads to the stock decreasing in price. The third pattern we are looking at is known as the triple bottom chart, which sounds like exactly what it is. As you can see in the diagram, it is basically a stock that has three very similar lows and then breaks out over the neckline, and this pattern is considered to be bullish. Here's an example of a Google chart from earlier in the year. As you can see, three similar lows were formed, and then the stock goes over the neckline after rising up from the third low, which leads to the stock breaking out. This fourth pattern is known as the triple top pattern. This is very similar to the triple bottom pattern, but rather than usually leading to a bullish trend, it usually leads to a bearish trend. As you can see based on the diagram, this pattern is formed by three similar highs occurring and then a move below the neckline. Let's take a look at an example of what this may look like on an actual chart. As you can see on the Apple chart, Apple had three similar highs and then a dip below the neckline, which led to the stock decreasing all the way to around $124. The final pattern we are looking at is known as the bullish pennant. As you can see, the stock rises, which in this pattern that is known as the flagpole, and that leads to a somewhat sideways move that starts to form a pennant shape, and then eventually if that stock breaks out past the pennant, it could lead to the stock breaking out. So let's take a look at this pattern on a chart. As you can see, while this bullish pennant is missing a flagpole, it still ended up forming a perfect pennant shape, and then it broke out above the pennant, which led to a breakout. For more finance-related content, please subscribe and leave a like. Thank you for watching. Until next time, stay tuned.